I'm David Brear, CEO at 11FS, and you are listening to Fintech Insider News. Your top stories this week are the US and the UK sign an agreement to regulate the risks of AI models, and we're joined by Lord Holmes to talk about that. Check is helping SMEs by adding their payroll solutions to money management app Wave, and Check's CEO Andrew Brown is on the show to tell us more about that. And Canadian payments company Nuvei has been acquired by Advent in a deal worth $6.3 billion. We discuss all of this and much, much more on today's show, so don't go anywhere. Hello and welcome to episode 843 of Fintech Insider. I'm David Brear, CEO here at 11FS. I'm joined this week on Fintech Insider News by three guests who are here to break down the biggest stories from the past week in fintech and the financial services space. Firstly, I am delighted to be joined actually in person in the studio by Lord Chris Holmes of Richmond. How's it going, Chris?
Very good. Good to be here. IRL, as we like to say.
I know, it's weird. Do you know what? I feel always disrespectful not to call you Lord Holmes and also not to mention the Olympic medals, if I'm honest with you. Because was it 15?
It was a long time ago, and I'm not sure how much cryptocurrency I could convert the gold medals into, but if anybody out there can help me with that, maybe it's a conversation we could have for another podcast, but great to be here always.
I think you've been on a few times lately as well. I feel like almost we're going to get you a guest host spot soon. You're going to be running the show, which is nice.
I'm happy to co-host it with you. I don't think I could in any sense take your crown.
Well, we'll see. All right. We are also very happy to welcome back to the show Andrew Brown, who is the CEO over at Check. Welcome to the show, Andrew. How are you doing?
Thanks for having me on this morning, David. I'm doing well.
Very good, very good. Exciting times over at Check. We'll discuss this a little bit later on in the show, but for anybody who doesn't know, remind our listeners what you guys do and give a bit of an overview.
Yeah, absolutely. So Check is a platform for building new payroll products and services. So we work mostly with software businesses who serve small and medium-sized businesses to help them offer payroll and make it just easier for business owners to run their day-to-day lives.
Very, very cool. We'll dig into that a little bit more as the news goes on, but great to have you on the show. And finally, it is a big Fintech Insider welcome to Mariela Hunter, who, one COO job isn't enough. She's a fractional COO. She does it for a number of different organizations. But welcome to the show, Mariela. How are you doing?
Really good. Thanks so much for having me back. I'm excited. This is my Fintech Insider trifecta. So thanks for having me back.
Well, same as Chris. I mean, you're clearly doing a good job if you keep getting invited back, right? So that's a good sign, right?
That's what I like to think, yeah.
Good. All right. On that note, we better jump on with the news because there was a lot of things to cover this week. This was the first story we picked up over on FinExtra. It was covered in a lot of different places, though, which is the US and the UK sign an agreement to regulate AI models. So the new deal between the UK and the US governments is believed to be the first international bilateral agreement to regulate the risk of AI models. The agreement will see an exchange of research expertise between the UK and this newly established AI Safety Institute and the US equivalent, which is yet to actually start operating over in the US. The UK government has stated that it does not intend to regulate AI more broadly. Through the US is thought to be taking a much more strict approach. This comes at a time when AI developments around the world are accelerating at a really rapid pace, and the controls around being ever more present and scrutinized is probably a pretty important piece. Only if we had somebody on this who really knew a great deal about it. Chris, do you want to come in first on this one? Because you're currently really taking a pretty proactive approach on this one and taking your own AI regulation bill through the UK House of Lords. Do you want to pick up this?
Thank you very much. And it's positive that the US and the UK are working together on AI safety, but this leaves open all of the other impacts, all of the other possibilities, all of the other opportunities with AI. I think that it is time to legislate. The government are in a wait-and-see position. I don't think wait-and-see has ever been a positive approach in all of our human history. I think it's time to legislate for the benefits. It's why I've introduced my AI regulation bill. We had a successful second reading of the bill. That's when Parliament has the first opportunity to discuss all the clauses and all of the provisions in the bill in detail. We had that on March the 22nd, and fortunately the bill got through second reading. So I'm doing a lot of work to try and get it through all stages of the parliamentary process and get it onto the statute book.
And as you say that sort of, wait and see is sort of roughly like a shrugging of the shoulders, and we don't know, let's just wait and see what, as you say, that's not a good thing when it comes to something that's going to be such a kind of a fundamental of the fabric of the kind of the next decade and beyond of really where we're going to get to on this. So, right. So why do you think people are taking that approach right now?
The government's position is at least interesting in that they held the Bletchley AI Safety Summit, very successful, a good subject to cover. But having done that, it's critical to cover all of the other elements of AI. Their argument is it's not fully formed. We need to wait and see. Otherwise, we will stifle innovation and inward investment. But what does history tell us? History tells us that right-sized regulation can be pro-innovation, pro-citizen rights, pro-consumer protection, a driver of inward investment and a driver of innovation because of the certainty, the clarity and the stability that it can bring. Sure, we all know bad regulation, but that's like saying because there's been bad regulation, all regulation is bad. That's crazy. So many lessons through history. From a UK perspective, if we think about the Fintech regulatory sandbox, if we think about open banking with the CMA 9 order, if we think about what we did years ago with mobile telephony, right-sized regulation, positive for consumer, pro-innovation, we don't need to wait and see. We know everything that we need to do to get this right now. So if, as the government claim, they want to be leaders in AI, which is a good claim to make, then I think if you want to lead, then you must legislate.
Yeah. Do you know what? I had as every crazy person on the internet does, have blog, will rant. I had a moment this morning where I sort of said, I feel like we've lost a bit of a leadership position in the UK when it comes to things like this. But actually, this is exactly what I'm talking about. Doing things like this, putting these types of things in place gets us to have a leadership position because it does create a magnet for talented people who want to come and exploit these things for the good of people, right? So, but where do you see something like you propose UK AI authority? What would that remit be? What would they be set out to do?
So the great opportunity that we have in the UK is having the extraordinary good fortune of being in a common law jurisdiction. English common law, well understood, used right around the world, has certainty, stability, usability. And if we legislate in this common law jurisdiction, it means that we can legislate in a principles-based way, which means that we're not needing to be overly prescriptive right now. We can base the whole of any legislation on principles which then can develop and evolve over time through case law and precedent. So if we take the AI authority, for example, that I suggest, anybody out there who's immediately thinking large, huge, cumbersome, bureaucratic, do-it-all AI regulator, take all of those thoughts out of your head. I'm suggesting a small, agile, right-sized AI authority which has horizontal focus and competency to look across all of the existing regulators to assess their competency to deal with the challenges of and the opportunities in AI, to look across all relevant legislation across the statute book, privacy, consumer protection, and so on, to assess its competency to address the challenges and the opportunities of AI. Through doing that, not only will we identify the gaps, not only will we be taking a whole of the economy, whole of the society, rather than a siloed sector-based approach. But it's the only way, it seems to me, that we'll give ourselves the chance of having a consistent, coherent approach in whatever part of the economy, whatever part of the society you happen to be in.
That's it's fascinating, and as you sort of reference things like the the sandboxes and our sort of history of sort of getting these things right. Is that the hope? Because obviously I always don't want to bring up the B word, but post Brexit, like actually being in a situation where we've got the ability to take more leadership positions in things like this and sort of forge our own, as you say, British common law that is applicable in many places. Is it important that we not only in this instance but continue to take these leadership positions?
Sandboxes are so successful. I'm a big supporter of them. We saw the positivity of the fintech regulatory sandbox that I was involved with in 2016. But don't take my word for it. A measure of success, replicated in well over 50 jurisdictions around the world. Similarly, with the work on open banking with the CMA 9 order, we invented open banking, now replicated in well over 60 jurisdictions around the world. So we know how to do this, but we have to take a leadership position. We have an opportunity to do that because of the current economic, geographic, historical, common law opportunities that we have. But it's critical that we have regulatory interoperability with our friends in the EU. They've had a valiant attempt at this with the EU AI Act in all of its almost 900 pages. But again, because of the jurisdiction that they're in, because of the legal code they work under, they're necessarily more rules-based, more prescriptive. We have an opportunity to take a different approach, which can certainly be interoperable with the EU. We also need to work even closer with our friends in the United States. What we're doing on AI safety is very positive in that, but we need to do much more on areas such as IP and copyright, where all of our great creatives, not just in the UK, but in the US and around the planet, the people that bring us some of those superb sounds, the music that makes our lives better, the writers, the photographers, their work all too often is being taken with no consent, no compensation, no fee, no respect. That can't be the way that we plot the most positive future. Of course, the creatives want to work with AI developers and deployers, but it needs to be on that relationship basis and where rights are respected. And I think we can do a lot with particularly the United States in that area.
Yeah. Well, bringing maybe the US into this then, Andrew, what do you think as a New York-based fintech entrepreneur? What's your type of reaction to these types of agreements?
Yeah, absolutely. And I'm a software engineer by background as well, which I think kind of influences the way I think about these things too. I think Chris, said it well earlier, which is, being really heavyweight on these things right now is, not the way to go. If I've learned anything from building new products and services over time, it's easier to, really go build the future than it is to predict, how the future might evolve. So you've got to have flexibility there, and the ability to be nimble and adapt is the capabilities and the trajectory of these new industries and new technologies emerge over the next decade and beyond. So I think folks getting smarter about this stuff, and governments in particular, developing competencies there is a good thing. I think all too often, certainly here in the US, we're regulating things that really we don't understand, or kind of, it's a bit reactionary more than really trying to look at how can we be proactive about really enabling, innovation and advances in society. So as long as you have that in mind and do it with the right, light touch and then evolve as you continue to go along, I think that's a good model for others to follow.
Yeah. I mean, Mariela, AI is definitely not something that's going to be going away. I think it's 2 or 3 episodes, stories every episode at this stage in terms of somebody doing something amazing somewhere in the world with it. So this feels like a good step.
Yeah, the pace of AI is growing faster than any other technology. It's around 5 or 10-fold each year, and no business, no legislature, consumers cannot possibly keep up. And it's only going to get faster. Interestingly, if in FS, it's of course more nuanced. I see some banks that have been operating for some time. They have been investing in AI for years within their innovation functions or data teams. And so since the hype in 2021, this is just going to accelerate. If they have not already released new products, these products are coming anytime soon. And you're going to see partnerships, you're going to see more hiring as well. And this is not just in the front end of products. Of course, there's a lot happening in the back end functions around cybersecurity, around HR, finance, etc. And specifically on regulation, I agree with Lord Holmes. I don't think there's a scenario where AI doesn't continue to be regulated. But I think it's important to know or how the regulation impacts each layer of the tech stack, because at the layer one, sort of foundational level, you have the silicon chips. This is where NVIDIA is dominant. That's an entire area of AI. But the layer two is where we see most of the legislation. This is where the OpenAIs, Gemini, Anthropic, Mistrals are. I see a lot of the legislation focusing on the LLMs and open source models as well. The infrastructure layer after, so where you have your database, your vectors, I don't see much of the legislation, which I think is appropriate. But layer 4 is where a lot of us operate, where we're building the models for businesses and commerce. And I think there's a lot of guesswork happening there in terms of where legislation is going to end up, and that is probably counterproductive. And then lastly, whether it's a layer or not, you have the whole area of robotics and AI. And I think that area does need to be probably looked after a little bit more. But yeah, as someone who's building AI applications and using AI applications heavily for business and for other businesses, this is where I stand in regulation. I'd love to hear Lord Holmes' comments. But I think at the layer 1, where we're thinking about chips and infrastructure, the most important thing that I think regulators can do specifically in the UK is investing in the types of actions that would foster the innovation for startups and smaller businesses. So if I was purchasing the British business bank, what I would do is I would look at the hyperscalers, look at the distribution of compute power, because all the credits are being bought up by the bigger global tech players, and have a reserve that then you can give to startups so that they can have the compute power and use that reserve to power some of those businesses. On the large language models, as I said, this is where most of the legislation is concentrated. I think there's a lot of rich conversations happening. And in terms of adding anything that is net new, the only thing that I would add is in the context of Apple's partnership with Gemini, which is interesting. You know, they're talking also to OpenAI. But the media angle has been all about whether Apple has lost the fight, which I think it's a bit naive to think that a company like Apple isn't developing their own. I think the real conversation here is, if you think about the ecosystem of Apple, all the phones, all the wearables, all the data that comes with it on us every day, plus a Google search, everything that is Android ecosystem coming together for a consumer type application. Now you're thinking about all sorts of things around data. You're thinking about privacy, access, ethics, because you have Siri, you have, you know, what we do with our Apple Watches is far too much information when you combine the two, and even some antitrust type considerations come into play when you talk about mergers of that, sorry, not mergers, partnerships of that type of magnitude.
Yeah, it really is pretty terrifying, isn't it? The amount of data that's out there, the amount of structures that are out there. I mean, it's a funny one when you apply it to financial services, because the amount of, I mean, I remember our chairman, saying, he used to be the CEO over Aviva Asia, and he was like, I remember when digital happened, we had to print all of the ads to show the regulator. Like, how do you do that in a AI model that we will all get a different, is it repeatable? Can I show how the act? No, it's down to very specific data sets for very specific individuals. So, but I really like what you said, Chris, which the sandbox for me was successful, not because of, okay, flick to page 87,000 for an answer of how to do this thing. It's like, it was really passionate people who wanted to create an ecosystem that fostered startups, like Mariela was saying, or organizations to do amazing things. Is a big part of this not necessarily just the what it says in the rule book, but the people that are surrounding it and their intentions?
I think you're spot on. The reason why the sandbox and why sandboxes going forward will be successful will be if it is that same sense of passion, purpose, product, possibilities, the shared endeavor with the SMEs, the regulator. But ultimately, as you say, it's about the people, because no matter how powerful these technologies are, and of course they are, they're tools in our human hands. We need to lead on this. We need to believe that we can lead on it. We decide, we determine, we choose at all the levels. It's why, for me, the most important clause in my bill is around public engagement, and for the government to really lead something which looks like meaningful, sustained, enabling, empowering public engagement. Because no matter how good the technology is, and it's extraordinary, the possibilities, just extraordinary, no matter how good that is, if the public, individuals, groups of individuals, certain sectors of society, if they don't believe that the tech is trustworthy, well, they're not going to get the benefits of it, but I fear they will be saddled with the burdens.
Yeah. It's going to be very interesting. What's the next steps? Obviously, second reading. I have to say I'm not familiar with the process to get things through the House of Lords. So what's the next process after that?
No reason why anybody should be as well. It's the standard legislative process in the UK. So first reading was when I presented the bill. That's just reading the long title and presenting it to Parliament. Second reading we did on the 22nd of March. That was a long debate and got through second reading. Then we have committee and report stage where amendments can be made to the bill. Third reading, then I've done all of my job at the House of Lords end. It then goes down to the House of Commons, which is equivalent to the House of Representatives in the United States. They do all the processes down there. Then if we get to that stage, it will go to the palace and the king can sign it into statute. And that's obviously my aim, my intention, my hope. But timing may be against me because potentially, as people may know, there might be an election at some point this year. I mean, it's possible, isn't it? It's possible. But even if I'm not able to get the full bill into statute, I certainly intend that key provisions within it make significant progress, not least around public engagement, not least around IP and copyright, not least around the concept of an AI authority and an AI responsible officer. These are critically important elements, but really to try and ensure that more people think around that we can achieve when we have principles-based agile developmental legislation, the principles-based transparency and trust, inclusion, innovation, interoperability, and international perspective, all of that, and crucially, principles-based, outcomes-focused, inputs understood, transparent, and where necessary, paid for. I think if we can get all that in place, we give ourselves such an opportunity to just transform societies, economies for the benefit of citizen and state alike.
Fantastic. Well, good luck with the next steps on that. And definitely as that goes through and as you get to that next stage, then look forward to getting you back and talking about it a little bit more. But we better move on because there was a lot of other stuff that did happen this week. This was a story we picked up on Street Insider. This is Check to power Wave's expanded payroll offering. Embedded payroll infrastructure company Check has announced a partnership with SME money management platform Wave. Through this partnership, Wave can significantly improve its payroll solutions to supply businesses by incorporating Check's embedded payroll API. Small businesses will now be able to access features including next-day direct deposits to speed up payroll processing, single and multi-state payroll, simplifying the tax processes for companies whose employees might work across multiple states, and access to human payroll experts to improve customer service. We are delighted to have Andrew on the show. Andrew, you're very well placed to talk about this one. Tell us a little bit more about what the partnership with Wave looks like.
Yeah, absolutely. So for those not familiar with Wave, they power more than 300,000 small businesses across the US and Canada, and they help them really start, survive, and thrive. You know, as a small business owner, you've got a lot of things to deal with. Managing your money is one of the ones you want to spend as little time on as possible. And so Wave helps you do that by helping you with your accounting, with your invoicing, accepting payments, and also with payroll as well. And so we're incredibly excited about this partnership together where Wave has been working in payroll for quite a long time now. But we've been talking a lot about the government today. The government here in the US is complicated, not only across the state level, but all the way down to the local level. There's more than 11,000 different local taxes that you have to worry about in order to handle payroll. It's really complex and difficult to do as a software company. And so that's really where this partnership comes in. By working with Check, all we do is payroll, and we're really an API-first offering that lets platforms like Wave really build, high-quality products, but focus on their expertise, not on the details of payroll. We're able to help them expand that offering, as you said, across all 50 states, handle complicated scenarios like, folks working in multiple states, and just at the end of the day, make it easier for these small business owners who, they can go think about how they're going to find their next customer, hire their next employee, not the details of how they pay their taxes.
Yeah, it's a bizarre one, isn't it? Nobody starts a business to do lots of complicated financial business stuff, do they? They do it for, making cupcakes or building whatever, it's so, the focus on almost removing a lot of that and sort of painful administration in the back office feels like a good win, Andrew.
Yeah, I think it's sort of ironic because I'm the business owner who did start that business, and I did it specifically because I hate this kind of stuff. Like you should not have to spend your time doing this. You know what I mean? Our whole goal is make it so that, certainly, Wave's customers and, the dozens of other partners that we work with, that we can just make it simpler for them. I think back to, it's really, again, we were talking about the benefits of legislation. There's so much good employment legislation that's happened over the last, century here in the US, right? We have, Social Security and Medicare and, all these benefits, paid parental leave, things like that across, again, federal, state, and local level that are really, really good. But who bears the brunt of figuring all that out? At the end of the day, it can be the business owner. And I think platforms like Check and in partnership with companies like Wave, we're able to help you have the best of both worlds, have those, social safety nets, those government programs that we all appreciate, while still having a simple, streamlined experience to actually run your business on a day-to-day basis.
Yeah. It's an interesting one. We built out with NatWest a SME proposition over in the UK called Metal, which was aimed at a very similar setup. And it was amazing going through sort of research and talking to customers, just how grateful they were for somebody to try and solve these problems for them, because actually, financial services uses a plethora of, complicated acronyms to, obfuscate all sorts of things, don't they? So just somebody to talk to them about, how do I run a business? How do I make these things happen? I mean, Mariela, as a COO, making your operation of your business run like a well-oiled machine, it's a pretty hard thing to do, right?
Totally. And firstly, Andrew, congratulations on the partnership and the continued success overall.
Thank you.
And where was Check when I was getting started? I think it was my first job. I was, among many things in a startup, as you know, many hats. Payroll was one of them. And it was an absolute pain. I'm talking about writing checks, physical checks, doing everything except for the taxes that luckily fell on someone else. But it was really, really painful. So yeah, on the venture-backed companies that I work with, there's of course a tendency to keep this back office teams as lean as possible, and there's zero desire to build on capabilities and hire for that. So they either are using Check or something similar already with as necessary integration. These are tech companies, so they build their tech stack for maximum efficiency. But large corporates, of course, a different story. You go, before when people were still in buildings, you would see an entire building floor of people dealing with payroll and taxes and it's just incredibly complicated, manual, error prone. So benefits, of course, on around the automation, accuracy, you have better cash flow visibility, you have everything in a single dashboard, freeing up productivity to better things, and the benefit of having everything holistically in one view. But what I really like about this partnership is particularly for entrepreneurs, this removes a huge hurdle just for getting started. If you're thinking about setting up your budgets and what you need to do to get started from a cost perspective, this could be a complete game changer because it just takes so much off the table and now focusing on the business, especially, complex contracts with employees. If you're operating in multiple states, this is a huge help for entrepreneurs just getting started in the US.
What's the reaction been, Andrew? Has the sort of reaction to this been positive?
Yeah, it's been really positive and really exciting, I think, jointly for Wave's customers and for Check. It's something we've seen across a number of partners now where they offer a payroll solution. They do it over a period of time, and then they recognize that doing that really well, in depth, covering all the edge cases that you need to across all 50 states is just really hard. And that's where, Check can come in and help you handle all of those. And so it's just a higher level of service, a better offering, and a lot easier for our partners to be able to offer it versus to trying to do it on their own. And that's a win-win for everyone involved. So yeah, we've been really excited with the reaction.
Very cool. Chris, we often forget just doing something in the UK is one challenge, but doing it across 50 states at one time sounds like a complexity that I definitely wouldn't welcome. But the SME landscape in the UK, it's always very important to make sure we set up a positive environment for small businesses. I think they make up something like 97, 98% of all businesses, and the impact on GDP for a country is pretty significant, isn't it? So it feels like an important step to take.
No question. We should back SMEs because they are the backbone of the UK economy. They're the backbone of most economies. Say 98% of the UK economy, small and medium-sized enterprises. And again, echoing the congratulations to Andrew, it's such a logical and extraordinarily powerful combination. I think with Check and Wave, you can see multiple ways in which that's going to grow at speed. So congratulations for pulling that together. And I think in the UK, we, at all levels of society, yes, as legislators, policymakers, but everybody across the piece needs to think longer and harder about the SME piece, because we have a trade finance deficit. We have an SME finance deficit. We have such a small percentage of our SMEs who export, and you can understand why. You need help. You need to know. You need everything in a much better package to enable SMEs to partake of all the opportunities there. So completely, every nation, back your SMEs because they are the backbone of your economy.
Very good. All right, guys. On that note, we are going to have to wrap up, I'm afraid, the first half of the show. We'll be back with you really shortly. Welcome back. Before we get into the second half of the news, a quick note on our most recent Fintech Insider show. In this episode, I was joined on stage at the JP Morgan Payments E-commerce Fintech Forum by a fantastic panel of guests to discuss regulation, innovation, and digital identity. Sarah Castellano from JP Morgan, Alad Lloyd Owen from Onfido, John Miller from Pop ID, and myself chatted about how the EU's new digital wallet could impact the payments landscape. We get into biometrics, PSD3, data protection, and a bunch of other stuff. And even the audience got involved. It was pretty cool. We did let them know they would be going out on the podcast rather than just in this show. So a few people did funny voices to not get in trouble with their employers. It was quite good fun. All right, go check out that episode. It is the one just below this one. Let's go back on with the news. All right, this was a story that we picked up over in Reuters. Advent to buy Ryan Reynolds back fintech Nuvei in $6.3 billion deal. So Nuvei, the Canadian payment processor, who investors include Hollywood actor Ryan Reynolds, has been acquired by investment firm Advent for $6.3 billion. The all-cash deal comes 4 years after it was first listed on the Toronto Stock Exchange. Advent paid a 56% premium to shareholders who had seen share price dips before the news of the potential sale broke back in March. The company will remain based in Canada and continue to be led by current CEO Philip Freya. Super interesting. I mean, I kind of feel at this stage Ryan Reynolds can't do anything wrong, basically. If he blesses some gin or a fintech or whatever, it seems to do pretty effective. But Mariela, 6.3 billion sounds like a big deal. Should this be turning heads?
Well, Ryan Reynolds is charming, he's funny, and anything he touches goes viral on social media. Yeah, I think his campaigns with Aviation Gin and Mint Mobile went really well. That's now a replicable model, and he's not the first sort of celebrity investor doing similar things out there. What I did hear is that Ryan Reynolds did not actually put his own money into Nuvei, that he was gifted money through equity issuance restricted stock. So if anybody knows more, and I don't know if this is going to YouTube in the comments, I'd love to hear more. But yeah, getting onto your question on the valuation and the Advent deal, So Nuvei is trading in the Toronto Stock Exchange, Nasdaq as well. At the time of the announcement, the market cap was around 4 billion. Just to put it into context, Nuvei, its competitors are Adyen and Stripe. Adyen was trading around 51 billion. Stripe valuation is around 65 billion. And some of you might remember in 2021, the valuation was around 94 billion before, this were the height of many fintechs. And Nuvei has had a good trajectory so far in terms of EBITDA revenue, trading around 40% quarter on quarter. The 56 premium to the stock is a significant return on the investment. But I think what is interesting is the PE market dynamics from a market perspective, because from a valuation perspective, the dry powder for buyouts is at an all-time record high. It's around 1.2 trillion the beginning of 2021 for buyouts. And over a quarter of this dry powder is 4 years old. So we're nearing the commitment of life. So if you will see a lot of money being put back into work, and the competition for assets is intense. The assets that are being put out in the market are where the seller has confidence around the price and that are going to be recession-proof, inflation-proof, et cetera. So they're going to command a high price for these assets. You're going to see these valuation premiums that are going to be quite common. And Advent has been in the technology and financial services space for quite a while. I think they saw this deal as a 2-for-1 because we know that Nuvei's recent acquisition of Paya is quite attractive from a PE perspective in terms of driving the margin from the synergies of the acquisition. So I think overall, this is not purely related to Ryan Reynolds, though I do believe that he's got that magic touch in terms of PR and driving the brand to a whole new level. But I think it's more attributable to what we're seeing in the terms of the PE market dynamics and the deal making.
Yeah, it's amazing. 98 billion Stripe valuation these days. Goodness, I didn't realize it got to that level. We really need to get Patrick Collinson back on the podcast.
94 to around 65 now.
It's crazy. When there's somebody who you really need to DM and ask if you could borrow some money, it's clearly him. But Andrew, at that point, fintechs eating other fintechs. I mean, the financial services is no sort of stranger to mergers and acquisitions, but, is it interesting that we're starting to see large organizations take over other large organizations and probably really understand what they're buying when they go into it?
Yeah, I think it really just shows, some of the maturation of this space. 5-10 years ago, payments and really this model of embedded payments was new. Folks were still figuring it out, and PE and those sorts of players tend to come in a bit later in the cycle. And I think that's where we are now, where these models are more established. Folks understand that this has been a massive sea change in the economy. It's so powerful for platforms and businesses who are using it. And so that makes it predictable. And so folks want a part of that and a part of that growth because it's still growing, incredibly quickly. It's a big part of what we see at Check. We see the platforms we work with, again, they're serving these small businesses. Quite often, they've already done payments. They offer payments through someone like Stripe or someone like Nuvei, and then they want to serve them with payroll as well. And so they're able to do that 2-for-1 by working with both, someone like Stripe and someone like Check. So yeah, that's, in my mind, that's really kind of what this means for the space.
Yeah, I mean, that sort of embedded sort of view in it. And, again, when we had Patrick Collinson on, he just said, take the solution to where the problem is. Actually, if you can embed your capability as close as humanly possible to where the problem is, then you're kind of going to do all right? And, everybody's valuations who do that seem to be doing okay, So I love the idea that Ryan Reynolds has some sort of Midas touch, though, with these things. Andrew, if you were gunning for like a celebrity endorsement for your organization, what would it be?
I mean, it would be hard to do much better than Ryan, I will say, but I will tell you. So Stripe is already a large investor in Check, so I think we've got Patrick's vote of confidence at least, which has worked out pretty well for us so far.
Very good. Confidence and money. Like if you can't have one, have the other. But Mariela, you're a CEO fintech, but bring yourself to that. What celebrity endorsement would you be thinking for?
I think now that we've set the bar with Ryan Reynolds, you need somebody as charming and funny like that.
There's not many people who fit that. I mean, Chris, English celebrities that we go for. I'm thinking like Judi Dench or Stephen Fry or something. Like if you want to invoke trust and sort of structure, you can't go beyond those two as like a trusted figure, really, could you?
I mean, two excellent choices for sure. And you can completely see why Ryan Reynolds works in these contexts. Great what's happened at Wrexham with the football club there as well. Very, very impressive. But for me, I'd have three people, but there's the unfortunate matter that sadly, none of them are still with us.
Right.
But I would have Ada Lovelace, Alan Turing, and Professor Stephen Hawking. Imagine the brain power, the fabulous diversity in that talent, what you could achieve with that endorsement, and certainly bringing them in more than an advisory capacity.
Yeah, that board meeting would be pretty intense, wouldn't it? It really would. But yeah,
sign me up to be a fly on the wall for that one. Yeah.
I feel like it's an animation that somebody will create at this stage. But yeah. All right, we are going to have to move on. But yeah, Andrew, congratulations on the announcement of who you're going to go for and the celebrity vibes thing. If we can somehow make that happen, then happy to do it. But all right, we better move on. This was another story that we picked up over in Reuters. This is PayPal wins case challenging fee disclosures for digital wallets. So PayPal has won a lawsuit against a rule requiring it to disclose fees associated with its digital wallets. The CFPB created the rule in 2019 to offer consumers legal protections on prepaid accounts similar to those on checking accounts, including the ability to challenge payment errors, unauthorized transactions, and fraud. However, a judge ruled in the US Consumer Financial Protection Bureau had no basis for treating those accounts the same as prepaid cards. The judge criticized the CFPB's arrogance in applying the rule to digital wallets based on not actually having evidence of consumers' harm, but on speculation that they could someday be subject to fees and similar to those used in prepaid cards. Last November, the CFPB unveiled a bigger proposal to regulate tech giants, digital payments, and smartphone wallet services, saying that they rival traditional payment methods in scale and scope, but lack some of the basic consumer safeguards in place. It's an interesting one, isn't it? I sort of feel like probably this stuff, the regulatory side of things, was put in good faith, to sort of try and give some protection. But sometimes these things are a little bit of a kind of a sledgehammer to crack a nut. But what's the response to this been like over in the US, Andrew?
Yeah, no, I think that's well put. I think the attempt at the regulation here was well intentioned and a thoughtful one. At the same time, obviously they're not the same products. Digital wallets, exist entirely virtually, and it's a little bit hard to compare. I think it really mirrors the conversation we were having earlier around AI and how you regulate it, right? It's a new, more emerging area. You should certainly learn from the past. I think that's what the regulators were trying to do here, but you also have to set up principles that are, flexible and can evolve as the use cases do. And obviously you have to do it in a framework that works in your legal environment, which sounds like I'm not the expert on that front, but at least one judge disagreed in this particular case. So I think it's going to continue to evolve. I think certainly more transparency is good for consumers. I think we've seen that over the last 10 years. I'm sure we'll continue to see that in terms of both what companies themselves do and what the regulation encourages. So, I think it's one step in a broader journey towards, more and more of that sort of disclosure.
Yeah, it's an interesting one calling it arrogant is an interesting step in terms of the structure around it, isn't it? That seems somewhat personal, doesn't it? But do you think this will sort of start to see a change in the US, Mariela, in terms of the approach to doing these things? Because, obviously we've just been talking about the difference between, the fully fledged rule book around all of these to more of a principle-based structuring.
And it's a tough one because there's questions about scope and there's questions about the previous appeal, I think last year in the appeals court, where PayPal's argument was the company does not generally charge fees for using its financial products. And this was only a small percentage of wallet transactions used in stored funds. And therefore, what they're saying is that they failed to account for the differences between PayPal and the prepaid account providers. However, the intention, as Andrew said, is nearly a good one. This is about transparency of the fees. And PayPal was saying that this would confuse their consumer. This would confuse clients. I don't think that's a particularly strong argument against transparency. So I think in this case, the legislation was probably, and the framework was flawed. but I think the intentions were good. So I don't think this one is going to go away in terms of driving more transparency for consumers in the long run, irrespective of the boundaries between prepaid or the stored funds in PayPal accounts.
Yeah, it just shows the from a laws perspective, from a regulation perspective, it's always got to be an evolving thing, doesn't it? There's the unintended consequences of those things being implemented. But I guess, Chris, back to all of the things that you were saying earlier on, this sort of points to why an engaged regulator and legislation around those things and an evolutionary approach to them is the way forward.
Very much so, and it goes to the heart of what is required to enable individuals, investors, consumers, citizens to feel that an entity, a business, an organization is trustworthy. Transparency is a key part of that. There's obviously elements to that. It's not necessarily helpful to lay every last detail on everything out there, but it's a question of what's required within that and what does the business want to put out there to enable that development of trustworthiness. Crucially, from the legislators, from the regulators, principles-based, outcomes-focused, inputs understood seems a pretty good way to go about it. And to have the regulator closer involved, not heavy-handed, not controlling, closer involved, as is the case with the sandbox, as you see with some of the examples, again, not to just drag and drop into different jurisdictions. But if we look at some of the elements of the Monetary Authority of Singapore or the Hong Kong regulator or the Swiss regulator, interesting things to look at there to understand and to think through these issues. And probably we should have more, not just dialogue and collaboration amongst our regulators domestically and internationally, but with more people in the room alongside the regulators. So we give ourselves the best opportunity to have that right-sized pro-innovation, pro-citizen, pro-consumer protection approach. It's entirely doable. In fact, it's the waking hours of every regulator should be filled with trying to go about it in those ways.
100%. I mean, it's going to be amazing to see how we sort of keep evolving these things and how, the different contexts and the different regulatory approaches, the world is shifting and changing, and it's amazing to see the responses to it. But all right, there's a couple of stories that we have to give a bit of a shout out to, but we didn't have enough time to cover them in a huge amount of detail. But the first one was over on Bloomberg, which was Amazon pulls the plug on cashierless systems in the US grocery stores. Don't know if you guys saw this one, but super interesting story. Amazon launched the ambitious grocery store concept back in 2022. It was completely cashierless. I don't know if anybody's visited one of these stores, but essentially I always felt like I was shoplifting. I'm not going to lie. Like that slightly awkward feeling where you walk out, making sure everybody sees you walk out to make sure people didn't think you'd basically stolen the thing. But according though to a report by Gizmodo, even though it seemed completely automated, it actually relied on 1,000 people in India watching and labeling videos to ensure that accurate checkouts were actually happening. So the cashiers were not on site. They were simply just in a completely different geography. So they were actually citing a lack of market share in the US as the reason for dropping these things down. But it appears like, we were all quite excited by the technology, but potentially this was a bit of a mechanical Turk. So it's interesting. I don't know if anybody's used the coming in and out of Heathrow, but they've got fully automated passport things, which I'm pretty sure are exactly the same. There's just 70 people in the back room looking at your face and ticking whether it's appropriate or not. But I thought this was a pretty weird story, but we'll have to move on. And the last one that we kind of want to cover was one that was picked up in a load of places, and I saw it on the news various different places as well, but this was picked up on BBC News, is Nationwide's Dominic West advert banned by the watchdog. You two in the US won't have the context of this one as much, but Nationwide's adverts have got a bit punchy lately, and they were taking a bit of a swipe at the traditional high street banks for essentially closing branches. But what happened a few weeks ago, and we covered this on the show, they actually were challenged by that claim that was made by Nationwide. Santander actually put in a complaint about this, that they were not closing branches, arguing that the UK Building Society had in fact closed more branches than Santander in the last year prior to the ad airing, which seems very short-sighted, doesn't it? If you're going to take a swipe at somebody for shutting branches, you might have checked all of your facts out before that one. So a weird one, but I for one, I'll be honest, I'm enjoying the latest sort of kind of more rap battle-esque marketing campaigns that are coming out. So I feel like NatWest and HSBC are going to have to step their game up to really join the fray on this one. But now it does bring us, though, to, if those two were not enough, this is the and finally section of the show. A look at something a little bit offbeat when it comes to the world of finance. So this is Turkish crypto chief starts a 11,196-year prison sentence. You heard that right. The former boss of failed Turkish crypto exchange, Theodex, I think it's called, has started the lengthy service after he was found guilty of defrauding millions of dollars from investors. Ozer, who was the CEO, fled to Albania in 2021 when the exchange collapsed, along with the $43 million of investor money that he had a USB drive, apparently with a rumored $2 billion of crypto on it. This is an amazing story. I mean, the charges that were sort of labeled against him, there was 2,027 separate crimes, including money laundering, fraud, hence the huge combined piece of this one. But I mean, that's amazing, isn't it? I feel like if you can suddenly get over a border with $2 billion, then no longer are they just looking at you for the big briefcase, but it becomes a very different thing. I mean, where would you still store $2 billion of crypto, Andrew? Just saying for a friend, I feel like if you're going to tell us a particular place in your flat in New York, I think you're in trouble.
I mean, isn't the whole principle of crypto decentralization? I don't know. I think I'd try and find 2 billion friends, give them each $1, and then we'll kind of pull it back together at the end. I would be too nervous to have it in one place.
I like the spreading of risk on that one. That's a good idea. Chris, like you got a USB drive with 2 billion of crypto to store. Where's that going?
I'm sure 11FS could help.
Yeah, yeah, we got you on that one for sure. Mariela, what do you reckon? Is this this sounds like a very long sentence that clearly he's not going to be able to serve all of that, right? But does this feel like a sign of intent from organizations around disappearing with investors' money, however big or however funny, is not a good idea, is it?
And start being freed 25 years in comparison, right? Big delta there for the exact same logic. So yeah, on where to keep 2 billion crypto. Is there a single custodian that is not about to go bust?
Well, that's the thing. If it's crypto, it's cashing it out at some point, and where you get it out is going to be an interesting challenge one. But there's not
maybe play in the casino in the metaverse and see what happens.
Well, and at that point, the memes just start eating themselves down there. At that stage, it's crypto in the meta world and everything that we're doing. But all right, we're going to have to wrap up the show. There was a lot of other stuff we could have covered. There was a lot of stories we could have covered for a lot longer, but it's been a great show. So thank you so much for guests for joining us today. Where can people learn a little bit more about you, Chris, and all the good stuff that you're up to?
Thank you very much, and really would love everybody to be in touch and come and hit me up at LinkedIn at Lord Chris Holmes. A lot of stuff on there, but really want to hear people's views on AI, on blockchain, on all of the possibilities, these new technologies. Really come join me there.
Fantastic. Andrew, where can people learn a little bit more?
Yeah, absolutely. You can find us at CheckHQ, CheckHQ.com, or find me on LinkedIn, Andrew Brown at Check.
Very good. Mariela?
And you can also find me on LinkedIn, Mariela Hunter.
Very good. I'm always lurking on LinkedIn these days, so if you want to talk, I'm always happy to do that. If you want to join the conversation, find us on pretty much every social media channel at this stage. Just search for Fintech Insider or 11FS, or if you want to email us on podcasts at 11fs.com. Thank you very much for listening, everybody. Goodbye.